Hi, family. My name is Will, aka Dr. Financial Literacy. I am a political economist. I am not a CPA, not a financial advisor, not an attorney. This is just my experience with velocity banking. As I define it, velocity banking is basically the use of other people's money to produce and reduce your debt in general, or to help you also grow in terms of financial enhancement. I'm working toward financial capability. Financial capability refers to your ability based on your behavior, your attitude, your skills, and knowledge to handle finances in general. The term I use is called BAS, and that'll be the acronym that we can kind of use. So, in trying to improve your behavior, attitude, skills, and knowledge around financial literacy, particularly mine also. I've been trying to use velocity banking and other aspects of it. I grew up in public housing, so really didn't have anyone to help me understand financial literacy and this particular term in terms of using it. So I am calling it BAS, behavior, attitude, and skills. All right, so let's go ahead and jump on in. So I have a total of $310,000.93 in debt in general, personal debt and business debt. I've successfully kind of reduced some of my personal debt in January in using velocity banking, and I'm moving on to some of my business debt now. I really like velocity banking and what it has done for me and how I can help you if you become a client. So now I'm looking to tackle a credit card, $6,653.03 of debt. Now there's two ways that I can do it. One, I can do it the traditional way, which I have been doing it in terms of just paying my interest, that additional amount, and having a payment and a minimum payment that they suggest that I make that'll keep me going. Normally, when we make the minimum payment, it could take you years, if not decades, to pay it off. So, in looking at this debt that I want to retire of $6,653, the interest on it alone is $124.88 for the month of February if I let it go out, and that's approximately $4.46 a day. What has become important to me is to look at my average daily balance and the interest rate that I'm being charged on each day in terms of my mortgages, my business, and the credit cards. Also, like I said, it'd be for an amount that normally is a percentage of your outstanding balance. I've noticed on some of my cards that I have a balance of maybe $6,000 or $5,000. They're only asking me to pay $21 or $30. And I was surprised at that. Next, this would be the fundamental payment of $164.88 if I go the month of February. I've already calculated the average daily balance, and it'll take me a couple of years to pay it off by going that way. But in improving my behavior, my attitude, my skills, and my knowledge around money and finances, particularly understanding velocity banking and how it works, I've started using it more in my private and public life. So I want to use velocity banking in reducing this business credit card because I'm good on the personal side. Velocity banking has helped me to reduce my debt. So in using velocity banking, we're starting with my base pay from my job of every 2 weeks. I got a salary increase from 1617 to 1942 every 2 weeks. That amounts to $3,884.80 from 4 weeks and 2 periods. Now I'm going to start taking out the expenses of my paycheck so that I can show you how velocity could work. One of the ideas about velocity banking is taking normally your bills and putting it onto some sort of debt to reduce the average daily balance and the principal. In this case, that debt is this credit card here at a little close to 7,000, and I'm gonna use the velocity banking. I'm gonna take all my expenses except for the rent and put it onto this particular credit card to bring down the average daily balance. So how I'm gonna do this, once I get my paychecks for the month, I'm gonna take out the rent, which is $1,276.50. That's something that I'm trying to pay through my credit card. I've been successful with it in terms of 3 mortgages, but something happened on the 3rd mortgage. It was rejected, so I'm trying to go back and talk with them to see how it was rejected. And I talked about it in early videos, but it did go through for 2. I opened up another checking account, business account, and linked that where I can have a small amount in the account, and then it helps me to move on. So I'm gonna leave out the rent, and of the housing expense, which is one of the categories that I have, that leaves me with $374.32 in utilities. I'm gonna take that and put it onto the credit card because eventually it has to come out. But when I put it in, it's gonna lower the balance. It's gonna lower the average daily balance that they're calculating. This 4.46%, dollars can be lower each time I put it in. So next, I also have monthly expenses. Okay, monthly expenses include my car payment, insurance payment, other credit card payments. That is in the monthly bill, and that is about $719.77. So I'm gonna take that amount also and dump it into the credit card, and that also is lower my daily balance. Lastly, I have an area that's called daily expenses, and that includes gas, eating out, laundry in general, things that you do daily, subscription. That amount this month is I've estimated it to be $143.31. Last month it was about 500 in general. This month I'm expecting it to be a little bit lower. So altogether, from my salary minus all 4 expenses, 1, 2, 3, 4, that total left me with $1,370.90. I originally started with the paycheck, with 2 paychecks bi-weekly of $3,884, which amounts to $19.42 each pay period. So with that in mind, from my altogether total minus all my expenses, I'm left with $1370.90 cash flow. So that's 3,000 and something minus each one of these 4 expenses. I'm left with $1370.90. In order to use velocity banking and to reduce my average daily balance, I'm taking these expenses that I know I'm gonna do, except for the rent, and place it inside of the card. And that's going to bring down my balance each time. Now, again, these are the total expenses across the 3 that I'm putting inside of the card. Again, I'm going to put in my $1,370 in cash flow that's left from here and all the expenses. Then I'm taking all 3 expenses except for the rent and also putting that in. So a total including on the card would be $2,608.30. Now that's going to be over the month in general because I get paid every 2 weeks. So I'm able to put money in. I didn't separate it here, but in general, 1942 one time, 1942 the other. I'm keeping all these expenses inside the card over here, the lower the average daily balance. So that means for the entire card, $6,653 original card. These are what I'm able to put on it. My cash flow that's not obligated to anything, and also the expenses that's obligated. Put that on there. That's going to lower the balance, but in general, throughout the month, it's going to build right back up because I got to put these things right back on the card. So initially, there's going to be a drop between 6,600 to 2,608. There's going to be a drop. Let's see what that drop could be. Just say. All right, so that dip 6,653.03 minus 2608.30. So the card will drop to about 40,044.73. So I can kind of put that there, 40,44.73. And I'll try to get definitely a smaller picture or image of it, so we're gonna add some more clarity to it. But in general, if I would have just did the 164 in general, the amount could have actually increased, and then I can make that minimum payment. But at a minimum, from the 6,653, if I do it the velocity banking way, it's going to fluctuate throughout the month and at least knock off about 2,608 of the expenses, particularly around 1237. And this amount right here will stay on my card in general until next month or until I spend it. But by using velocity banking, I'm at least taking about $2,000 off of this card, kind of like daily up and down. So that's going to change how much I'm paying per day, which is going to save on interest. Now, again, there's other ways that you can be doing it. I decided to try the velocity banking way. It was new to me. I wanted to experience it and then report back to my clients how we can possibly use it. This is just one way. I'm an experimental political economist. I've been blessed to gain some of this information and knowledge, and I just wanted to share it with others. Yeah, in general, I'm just happy to be alive from the experience of 30 years ago of barely missing a drunk driver in a vehicle that could have taken my life. So I'm happy to be alive, happy to work with you, happy to do some experiments to continue to do this. And if you don't have a credit card, my company also can try to set you up with starting velocity banking by helping you bridge between what you owe and kind of like get over maybe the apprehensions or the fears or the misunderstanding of it. Love to help you out with a small $500 bridge loan to just get you started to see how this system can really work for you in general and give you an opportunity. So if you found value in it, please, thank you very much. If you just hit the subscribe button and continue to watch, I really appreciate it. And thank you very much for joining me on this journey. Everybody have a great day.